on Zillow or something and just say, look at all these price reductions, look at all these foreclosures. And it's like the most unscientific way to go about it.
Yeah.
And especially in 2025, there's so much data in so many places that you can go to. And it's like, you got to look at the whole picture, right? Because there's so many houses. I actually had a client this week saying how, you're like, man, all I see is price reduction, price reduction. It's like, well, there are sellers who overprice and then they have to come down because they were a little too proud of their house, right? But it's like, that's such a small lens. You know, you have the Case-Shiller price index and these other like macro pieces of data that give a better picture.
We're in a normal market. You know, it's we were in a seller's market for a very long time, and now the inventory is taking about 5 months to sell in Orange County. So we are, you know, pretty solidly in just a normal market.
Because 6 months is supposed to be like the balanced market.
Yeah,
Sure, correct.
Anything more than 6, you start getting into more of a buyer's market. And you're seeing it now with seasonal change. I mean, we're getting to the fall now, and just like you were talking about with sellers fishing, you know, they're putting their property on the market to see if it'll sell at a pretty high price compared to what it should be selling for, and then they need to do a little bit of a price reduction. How motivated they are to sell,
Right?
That's kind of hard to tell. I mean, really, the only way to tell is by submitting an offer and seeing how motivated they are. But you have some people that are just out there just fishing, and if it doesn't sell, they'll take it off the market for the holidays and maybe be a little bit more serious with the price in the spring.
Yeah. Yeah, of course.
Dude,
welcome to the Mortgage Lounge, as we call it.
I've been watching your podcast, man. So I feel privileged to be in one of these seats with you. So I appreciate it.
Yeah, no, of course. Do you want to start just by giving some of your background? Because you have a cool background.
Yeah, I mean, man, I don't usually talk about my background, but yes, I originally started in mortgages way back when I first graduated college. It was like 2003, and my brother's friend opened up a brokerage in West Dallas, Wisconsin. And when I heard the type of money they were making, this is like during the refinance boom, I was like, hey, that sounds like better than my, park attendant job that I had at the local county park. So I started there and making calls and helping people refinance their homes and consolidate a lot of their, high credit cards and save them a ton of money per month. And then I realized I wasn't really, the refinance game is just such a quick turn. You don't really develop relationships with a lot of your clients. It's just like, give me the best deal, the best rate, help me save money, see you later. It's kind of a short transaction. And I always was interested in real estate. So I ended up moving to California and got my real estate license in 2006. And then while I was working for another company, I decided I saved up enough just to kind of go cold turkey and start working for Star Real Estate here in Hudson Beach. So yeah, that was January 2007 is when I officially started. So I've been doing this for almost 20 years and was able to make it through the crash of 2008, which was surprising to a lot of realtors that were around for a long time, because when I was starting, they're like, why is this kid starting in real estate now?
Right.
So it was like one of those things where I didn't know any better. And I just happened to start doing some short sales and helping people get out of their houses, and then slowly meet enough people, do things the right way, and then here I am.
When did you partner up with Doug?
Yeah, so originally I started working with a realtor who had like 30 years in the business. She worked out of Huntington Harbor. Her name was Marvine Huss, and we partnered up, and that lasted almost 6 months, 9 months, and she was great. We just didn't really, she was on her way out, I was on my way in, and Doug approached me because I was also doing my own stuff on the side, or trying to. It was just like year one, so there wasn't a lot happening.
Right.
And Doug had an investment client. It might have been like somebody that he knew was selling 3 properties at once, and then he had another deal going. He's like, I just got so much going on. Can you help me out? So I started working with Doug, and that was like 2007. the end of 2007. So it was basically my first year. And yeah, we've been business partners ever since.
Yeah, and part of what spurred in my mind is I know Doug has talked about the REO days. So, because he was calling on banks and doing that kind of business, and thought that maybe some of that would have rolled around in the last few years, even though it didn't materialize, right? We haven't had any mortgage issues and values have stayed steady. So you got to partake in all of that too, right?
Yeah. Well, we were really involved in the short sales and the REOs, and we had clients that were trying to pick properties up that were in foreclosure, and waiting for properties to go from, trying to get sold through short sales to go into the county, not being sold at the county, and then go, being put on market. And clients be like, I can't wait for this property to come up as foreclosure. And we did a lot of short sales and foreclosures, but what's happening now is there's really not any of that happening.
Right.
As you know, in the business, they totally changed how the lending practices are, after 2008 happened. So you're going to hear stuff like foreclosures are up 300-400%, but that's just basically like instead of 5 foreclosures in Orange County, last year, now there's 8 foreclosures in Orange County. I mean, I don't know the exact numbers, but it's tricky how they're that's not even 100%, but you get my drift.
I remember a few years ago, there was a headline, foreclosures up 10% in Orange County, and it was because it went from 10 to 11.
See, perfect example.
Yeah.
Right, yeah. So there's not a lot of that happening, but man, there's a lot of clicks happening. Or YouTubers are really using these statistics to, get people to click on their site, and because there's a lot of people that are waiting for another crash so they can get into the market. So I hate to say it, but they're hoping for some real downturn, so they can get in. A lot of the Gen Z buyers don't have the income or the down payment to be able to afford, especially homes along the coast in California. Mm-hmm. So it's unfortunate that they're kind of being told not so much a lie, but it's not the full story.
There's one person in particular who I think is guilty of this on YouTube, and I've seen videos where he'll pull up a map of Southern California on Zillow or something and just say, look at all these price reductions, look at all these foreclosures, and it's like the most unscientific way to go about it. Yeah. And especially in 2025, there's so much data in so many places that you can go to, and it's like you got to look at the whole picture, right? Because there's so many houses. I actually had a client this week saying how, man, all I see is price reduction. It's like, well, there are sellers who overprice and then they have to come down because they were a little too proud of their house, right? But it's like, that's such a small lens. You have the Case-Shiller price index and these other like macro pieces of data that give a better picture of what's going on. I know you want to talk about the market, but year over year, we're still appreciating. Mm-hmm. We've had some softening month over month, but like for the most part, prices have been really, really stable.
Absolutely. Especially along the coast. It's a little different story when you're in Huntington Beach and Costa Mesa, Newport. So inland, it's funny because the same thing with the maps. Like they'll pull the Google Maps out further and further just to get enough of those dots to kind of feed up the map of price reductions. But really, when you zoom in on a particular community, you might have just like a more price reductions in a certain area, but that's just kind of a normal market. We're not even we're in a normal market. It's we were in a seller's market for a very long time, and now the inventory is taking about 5 months to sell in Orange County. Mm-hmm. So we are pretty solidly in just a normal market.
Because 6 months is supposed to be like the balanced market.
Yeah,
sure, correct.
Anything more than 6, you start getting into more of a buyer's market. And you're seeing it now with seasonal change. We're getting to the fall now, and just like you were talking about with sellers fishing, they're putting their property on the market to see if it'll sell at a pretty high price compared to what it should be selling for, and then they need to do a little bit of a price reduction. How motivated they are to sell,
right?
That's kind of hard to tell. Really, the only way to tell is by submitting an offer and seeing how motivated they are. But you have some people that are just out there just fishing, and if it doesn't sell, they'll take it off the market for the holidays and maybe be a little bit more serious with the price in the spring.
Yeah, I see that. So what we really wanted to talk about today is your new listing.
Yes, I'm so excited. I got a new listing in Corona del Mar, 23 San Mateo Way, and this property is. Every time I go there, I'm like, I can't believe this is my listing. It's an amazing property. The view is insane. A lot of homes in Corona del Mar don't have a view at all, and the ones that have a view, they don't really have a backyard. And if they have a yard, then they're usually looking over like rooftops. So, or the view is maybe a little bit more north, and you're seeing like Fashion Island and maybe the reservoir there. So this one it's kind of got it all as far as the dirt. It's a great piece of property. Mm-hmm. The home is also really nice, is big. It's about 3,600 square feet. Not a ton of upgrades in it, but I wish I had a video camera on my broker preview yesterday. Mm-hmm. I was standing in the living room, and as people walked from the entrance into the living room, and you see out the window the view, and people stopped in their tracks, and they're like, wow, like their jaws dropped, like they couldn't believe the view. And that's before they even go outside. But yeah, it is truly an amazing property. We're going to be open 1 to 4 Saturday and Sunday. Anybody that's interested in a very unique home with a view in Corona del Mar, and a beautiful community of Spyglass Hill. It's a treasure of an area. I mean, I'm really fortunate that I have that listing, and I can't wait to show it off to prospective buyers because it's really amazing. I get giddy every time I go there because I love the view. I hang out there and do work. So
yeah, that stretch down there is incredible, and I learned how like sacred it is around here, right? Because like you, I'm not from Southern California, and when I was making the move down here, I eventually landed on an apartment complex because I was younger, and told a buddy like, oh, I'm gonna go live in Newport Beach, and he goes, oh, that's really nice.
Yeah.
Oh, okay. And the more time that you spend down here, you realize that Newport Beach is kind of a destination for a lot of people. And even getting into real estate and listening to different podcasts and all these investors that are nationwide, and they'll talk about how I got a place in Newport. Like it was almost like a bucket list item for them, right? And
yeah, absolutely, yeah.
And this property, where it is in CDM, is like the cream of the crop of that area that everybody's already trying to get to.
I totally agree. I mean, unless you want to live down where you're walking to the beach, which has an incredible appeal. I mean, I get that. There's some people who would rather have the view, and this is for those types of people, mm-hmm. And Newport has that the calling, I guess. I don't know how else to say it. It's just, people love living there. It's got the downtown area, the peninsula, you got Balboa, the pier, everything down there to me is like, that's what Southern California living is all about.
Yeah. Yeah.
So.
It's incredible. You go to Fashion Island that just has so many good shops and restaurants, and then you don't have to drive too far down the coast, and you're into Crystal Cove, mm-hmm. where it's just nature and beautiful and feels really wide open.
Yeah, I mean, this view actually looks over into Newport Coast, and you can see the sixth hole and Pelican Golf Course, so Pelican Hill. And it's pretty amazing just to just be able to see just out the window all of these iconic, Southern California. I guess they're destinations for so many people.
Yeah.
So
you may know I have family that's out in New York, and meeting some, say distant cousins at one point, and they go, "How close are you to Laguna Beach?" And I'm like, once again, from Northern California, it's like, I don't even know where Laguna Beach is. But people outside of the state, when they think of California and Southern California, that's the stretch they think of, right? Is that PCH and kind of the South Orange County.
Yeah, I think that show, the OC, helped really put that area on the map. And I love getting down there as much as I possibly can. And this is like right on the threshold, mm-hmm. It's like you're, you got that view. You're not in Laguna, so you're not that far south. You're still around. You still can get to the freeway really easily. You got, like you said, Fashion Island's right around the corner. You can get to Newport quickly. MacArthur is right down the road. So yeah, as far as accessibility, this is just as about as good as you can get for being in, that kind of part of Newport.
Right. So this is probably a home where you're going to see lots of first-time home buyers come through.
Absolutely, yeah, I know. I had a friend text me, and he lives in Idaho, and he's like, I just submitted my offer after I posted it. So it's going to be an investor developer more than likely. It could be a third party type. Let me back up a little bit. Not so much a third party. It would be like somebody looking to buy it and flip it type of thing. Mm-hmm. It would be. Or it could be somebody who really wants to live there and can maybe put some money into it. You can do a lot with that floor plan. It's, like I said, it's 3,600 square feet. If you put, a couple $100,000 into it, you can go more than that, of course. It would be a great home for somebody. Absolutely. I mean, there's not a ton that needs to be done to it, but there's also those people that have even more money, and maybe they want to, tear it down and just build the house of their dreams in the location that they've always wanted.
Yeah, you're buying the dirt in a lot of ways, the dirt and the view.
Yeah. There's a good percent of buyers are going to probably fit that, that what am I trying to say?
That profile, right? Or that.
Yeah, I mean, the reason why we're marking it the way we are is because there's just a high percentage of a chance that somebody's going to want to buy it and do whatever they want with it. Mm-hmm. So whether it's an investor or a person that's always wanted the view and want to maybe kind of create whatever they want, either by remodeling it pretty heavily or tearing it down and just building whatever they've been dreaming of. That's really the place to do it. Mm-hmm. And that's why we have it priced the way we do. Yeah. The neighbor next door, for example, they're probably listed for, it's like 18.8. So we're about $10 million less than them.
Right.
So it leaves a lot of wiggle room for investors or for, developers or, primary buyers.
Right. Yeah. So, and I'll be there at the open house with you. And we were talking about putting loan scenarios together. And it's just like, this is so wide open because of just the endless possibilities of who could come through that door, right? Mm-hmm. When you're at a $500,000 condo in Orange County, there's a certain profile that's typically going to be interested in that, right? But $9 million on the coast, it could be a developer that's going to want some type of construction loan and needs some type of rehab budget to be included in it, right? Mm-hmm. I've seen a lot of those go cash. They don't even need me, right? And then kind of on that side of it too, people of that influence or affluence will have their own private banking situations, in which case they still don't need me, right? But it could be the other end of it where, not as a blanket statement, but I think a lot of people in that echelon own their own business, right? They're not working for somebody else. And sometimes those people have really creative CPAs, so they then will find me because they need some type of alternative loan program that doesn't use traditional documentation. So there's just so many, I think, avenues it could go that I see. I did one, not quite 9 million, but I think the price point was more like 3-4 million in that South Orange County in this last year, and they financed 500,000. Right, so it's just like you never know what those people are going to be looking for.
Well, and you helped my client out not too long ago with a hard money loan through an investor that you put us in contact with. So that's an option. Yeah, I mean, for an end user that just needs some money to do some upgrading to it, I mean, maybe that would be an avenue that I think you could definitely help them out with.
Yeah, especially Orange County, there's lots of people with money that want to lend it out, and then they like lending in Orange County because they just feel like the market is so stable, right? So I've had some requests for when you get out into the desert, into Joshua Tree, not so much like Palm Desert proper, but a little bit more of the boonies or rural area, as we would say, right? And there's just not as much investor appetite for that. And I think, there's not as many buyers. Maybe it's a little bit more uncertain, but I think the biggest piece is just familiarity, and people know Orange County. They feel really, really good. We talk about the 08, 09 timeframe when everything else was crashing, and Orange County did not plummet like other places did during that time either, right? So if you're lending your own money, that's always the biggest concern, is what happens with this property value, and people like Orange County for that.
Yeah, we were kind of protected, because there's just not a lot of places available. There's high restrictions, and there's cities that, are preventing, bigger, more construction. And I think, we have not a whole lot of areas to build as well. So it's like, where else can you go? And you go on the other side of the mountains, it's 110, 120, and you're not really living that SoCal lifestyle.
Yeah.
The beach. Yeah, I mean, you just have a better weather and I think just the overall lifestyle.
Yeah.
When I think of Southern California, I don't think of living in, Riverside County. I'm nothing wrong with that. It's just, that's the appeal of Orange County.
Yeah. Southern California is Hollywood and the Santa Monica Pier or the Orange County beaches. Like, that's the iconic destination, and Disneyland, right?
Yeah. And also industry, the economy is really good here as well. So there's just a lot of service jobs because of the money, right? That brings a lot more people in. So yeah, I totally agree with you. It's almost like we're sheltered from, obviously the prices did drop, but we did not drop nearly as much as we were expecting to.
Yeah. I definitely saw that in my pre-mortgage life. I think, I worked for a company that sold parts to different manufacturing companies. And Southern California was always such a tough market for the company because there are just so many industries. I mean, Southern California has tons of biomed and med device, but also semiconductor and also aerospace and just lots of miscellaneous stuff, right? So I think just from that standpoint as well, like from an industry standpoint, it's so diverse and there's so many big name companies that are down here. I mean, you think about, for a while, there's kind of a rush of EV manufacturers in Southern California, and then all the rocket people in Southern California. I mean, there's just so much industry.
And also, to add to that, I think it's something like 60% of employment is like service related. So it's like, well, even if big companies do leave, we're insulated because of so many people are in the service industry. So whether that's something like you're, cleaning houses, or you're washing cars, or you're, helping people, maybe helping people with childcare or whatever it might be. I mean, these are all services that aren't going to go away when some of the, maybe if it does happen, where there's a lot of industry that does leave California, which, there's always a threat of, because of the taxes and whatnot, it's higher here to have a business. So I think we are insulated pretty well from any real economic collapse.
Yeah. Well, and some of it's really tough to relocate. Like, another major industry in Southern California are the refineries, right? And like, those are massive pieces of land with huge equipment. I mean, you don't relocate a refinery that employs, thousands and thousands of people. I don't know if you've ever seen, so I worked with Chevron El Segundo quite a bit. That's again in my past life. And they had a video of, I believe it was their coker unit going down the 405, and just how much of a just theatrical production that was to get that unit there. So you can't just up and move the whole refinery and the thousands of jobs that it brings too.
Yeah, that's another great example. I'm even back in 2008, when the crash did happen, I don't think a lot of people remember how difficult it was to pick up a home via short sale. I mean, there was so many offers. I mean, I was selling these properties, and we would get some of these houses, we had like 10, 15, 25 offers trying to buy these properties. So 2006, it started to like the inventory really, no one wanted to buy in '06 and even most of '07. But then once we got to like '08 and these properties were short selling, there was so much activity. I mean, people were trying to buy like crazy through '08 and '09 and 2010. I think even we hit bottom, nobody predicted they would go down, or when it would hit bottom. I mean, people just wanted to pick up a property because it was so much less expensive than it was in '06 or '05. Like, man, this is a screaming deal. Why wouldn't we buy this? So I think that's another misconception of if there ever is anything like an '08, buyers are on the sidelines and they're going to scoop things up. It'd be like if a really hot stock, gets a bad report. I mean, sooner or later, like, that stock is going to be bought up again and the price is going to go back up. It could be a temporarily drop in price. But yeah, this market is pretty well protected in that regard. There's a lot of money and there's a lot of people who would love to get in, which kind of brings me to rates, right? I mean, I'm curious to hear what you think is going to happen about rates, and I know there was a big announcement a couple of days ago.
Yeah, so we talk about it quite a bit. Fed rate does not equal mortgage rate. Long term, they tend to follow each other. Short term, they often go opposite. And the last number of cuts that we've had over the last year has been that every time the Fed cuts, rates go up. And that was the case again on this Wednesday. And it has more to do with what the Fed's comments were, because it seemed like a sure thing that there was going to be a third cut before the end of the year here in December. And Jerome Powell said, maybe not. We'll see. So for like the last 2 or 3 months, every time I check the market odds on what Fed cuts are going to be, it's always more than 90%. This meeting leading up to it, it was like a 99% market odds that it was going to cut a quarter. I checked either this morning or yesterday, and it's only 65% for the next one, right? Okay. So, but when I say rates go up, it was a little blip on the screen, and there's so many things that affect rates. So I think that some potential is that when we finally end the government shutdown and the BLS job reports come out, before the government shutdown, those reports were coming in very weak. They're having revisions showing basically job loss instead of job gain. And when those reports are now released after the shutdown, that could move mortgage rates down as well. Because if you don't have a strong job market, that pushes mortgage rates down. So I think that's probably the biggest mover that we're going to see. Okay. They've really mellowed out. We are still in a bit of a downward trend overall, but I just don't see any big jumps in either direction unless something like that comes along.
Got it. Okay. I did see the Senate voted down, I think there was 2 tariff. One was on Brazil to increase the tariff on Brazil. Another was to increase the tariff on Canadian goods as well. And I think both of those got voted down, which was, I don't know if it was surprising or not. But if that continues to happen, if the tariffs get reduced back down to, closer to where they were before Trump got in office, is that going to help with inflation? And will that also help with rates as well? Because isn't Powell trying to prevent the inflation from happening? That's why the rates are higher?
Yeah. So initially we had the higher Fed rate because we had 9% inflation and we had to bring it down, right? Yeah. Inflation over the last year has also really mellowed out, right? We've been hovering between 2 and 3% overall. With the tariffs have minimal effect on the inflation numbers. And it's because not all of the tariff cost goes to the consumer. So Logan Motoshami at our last event, he's with Housing Wire. He talked about how usually in the consumer price index, which is one of the main measures of inflation, it doesn't make a big difference. That was about a year ago, and his prediction more or less has come to fruition on that. And inflation was definitely a big mover for a while in terms of what mortgage rates were doing. But since it really has just kind of mellowed out, it's really been less of an issue. Usually it's the job reports where if you see any big movements in mortgage rates, it's because of jobs at this point.
Awesome. Okay.
Yeah. And I think that's the Fed's bigger concern at this point as well, is balancing, keeping inflation under control, but also make sure we don't have too many job losses and dip into a recession. So that's why they are starting to slowly cut. And the cuts have like a 6-month lag time. So, I mean, they're just steering this gigantic boat, and why they're really cautious to try to make, too large of a cut or react too much too fast.
Yeah, it's a big ship, and I think that's kind of how they view it, right? It's like very careful on when they're going to steer one way or the other, because it's can have major impact.
Yeah, not very nimble. Yeah.
Right. Yeah.
Hard to recover from your move. Yeah.
Yeah. Well, very good.
Yeah.
Thank you. Thanks, Mike.
Yeah.
It's good to get a little more information on rates and what's moving the needle. So I appreciate that.
Yeah. Anything else with your property?
Yeah. Well, just a quick story. During the broker preview, I ran into a neighbor, and this neighbor was friends with the original owner of 23 San Mateo Way. And he told me a story about how Mr. Green, it was Mr. and Mrs. Green, Mr. Green told his wife one day that, I think we should sell this house. He heard rumors that they were going to put a highway behind the property. And he said, maybe it's time for us to get out. This is like in the late 70s or something. So they ended up buying a Big Canyon, which I supposedly has a really amazing private golf course, which we should figure out a way to
definitely figure that. Yeah, we'll do some market research.
Yeah, you got to get over there and hack around. And so anyways, they sold, and then they moved to Big Canyon. And he still had friends in Spyglass Hill. So, and he got a little older and wasn't able to drive himself. So the neighbor who came over, his name was Alex, and he said, I'd go pick him up and I'd bring him over for dinner, once or twice a week. They were really good friends. And every time they drove by 23 San Mateo Way, Mr. Green's like, we should have never sold that one. So he said every single time they drove by, and they lived a little further down the road. So it's just a funny story where, you don't know what you have until you don't have, until it's gone.
Right.
So it's good to know that the original owner kicked himself every time he drove by the property that he sold. So I'm hoping that the next buyer that gets this property is going to be really pleased with their decision, because it's an amazing property and very unique to Corner Lamar. So,
do you have what the last sales price was on it?
Oh, that's such a good question. I want to say it was somewhere around 2, right around there, a little bit under 2. I want to say it was about 22 years ago. So it was a long time ago.
Yeah. I mean, it is, and it's not at the same time. Like 22 years is very much within a lifetime. Could you imagine buying a house and appreciating $7 million, in the time that it takes to get your kids to college?
Oh, yeah. I mean, that's a really good point. Yeah. Yeah, there you go. I mean, this is supply and demand, right? There's not that many homes out there that have this much yard and this great of a view. I mean, it's just slim pickings. So, and the location is just obviously amazing. And it'll just be in Corner Lamar and Spyglass. It's like you can't really find that anywhere else.
Yeah.
Unless you go down to Laguna, then you have you have higher price points down there. So
yeah. I think the old adage of like location in real estate actually doesn't come up as often for me when I'm actually working in real estate. And I think maybe it's a Southern California thing of just like, a person's needs and their budget, you just do the best you can with it. Mm-hmm. And that doesn't always equate to buying a beach home, right? But whenever you have the opportunity of, okay, do we go maybe a little less house, but the better location, or more house? I mean, this is the prime example and the exaggerated example of how much those rare homes in the rare locations can really make an impact generationally in wealth.
Oh, absolutely. Yeah. I mean, that's a really good point. There's people who move for so many different reasons. I have clients that move because they got a dog and they don't have a yard for their dog. So they'll buy a house that has a yard, just to give you an example of the many different reasons people move. But, having this type of view, and there's people who really appreciate waking up, going, making coffee in the morning, and just having, Catalina staring right back at you.
Yeah.
And amazing sunset every night of the week, So it's like, if you can picture that and you have the funds to make it happen, this is, I'm saying a no-brainer, but it's definitely worth considering.
Right.
So
Yeah. The Beachcomber is one of my favorite spots. It's
Oh, yeah.
California.
Yeah, that's right. We talked about that. Yeah,
Yeah.
parking on the other side and going
Yeah,
through.
you go down and just the ocean right there. For anyone watching in Southern California,
Beachcomber.
do a date night at the Beachcomber.
We don't do. Yeah, we don't get down there enough. But yeah, thanks for bringing that back up. Yeah, I got to get down there.
Cool.
Yeah.
Well, anything else?
I don't think so, but I appreciate all your time.
Yeah.
It's been good. I feel like now I'm no longer a rookie here. So
Yeah, right.
hopefully you'll invite me back and we'll find something else to chat about. My new listing, maybe.
Yeah, the next one. Yeah,
the next one.
We'll have to follow up on how this one went. Yeah, how it unfolds.
Sounds good.
All right. Thank you.
Thanks, Mike.